2. But right now, it is time to welcome in Siddarth Bhamre, Head of Research at Religare Broking, to talk about the shape of the market. Siddarth, good to have you on the show, and hope your week has started off on a good note. But what a phenomenal rally, right? April onwards, new financial year onwards, it was like a new year, a new market. What have you made of this run up to 19,000 plus? Do you think it has more legs, more steam? I mean, what are you telling your clients? Book some profits or keep buying more?
Good morning, Sylvie. So, Rima started the show by stating that, there are only 2 or 3 names which are taking this market higher. But if you look from 1 week perspective, last 1 week has been excellent for market. And before that, Sylvie, market was just consolidating. So it's mainly HDFC twin factor and some of the IT names which is pulling market. But I have always been proponent that irrespective whether it's one stock or it's, a number of stocks which is taking market higher. Market high means market higher. So it doesn't matter how many stocks are taking it higher. Our take on market is just slightly cautious at this point of time. That doesn't mean that we are saying that there is a big correction in offering, or there would be, or we are suggesting sell your equities and move out. But this kind of run up is not justified from valuation perspective and also from macro headwinds, at least global macro headwinds perspective. I want to throw some data pointers over here, Surbi, and especially from what's happening in US. If you look at 2-year bond yield, it is now inching towards 4 mark. If you look at 10-year bond yields, those have also moved higher. Fed commentary is clearly stating that there are 2 more big rate hikes which are in the offing. Job market there, though, has shown signs of easing, but is still, suggesting that Fed would continue to hike the interest rates. Even if you look at dollar index and other aspects, these aspects are suggesting that nothing much has changed. Yes, our domestic economy is doing great, and we would probably continue to do better. But our approach in market, and especially at these higher levels where valuations are not seemingly attractive, will be very sector and stock specific. And we spaces where we are still bullish, where valuation comfort is still there. And that is the approach we are. We will not go all out and say that this is a great bull run and you should, completely invested in equity. Yes, you should be here. But as you know, it is said, Surbi, that the party is on, but you should dance near the door, that kind of scenario.
Dancing near the door, huh? Okay, let's find out what you're dancing to then, Siddarth. What kind of stocks and sectors do you think that you'd still support?
So let's go with the theme. You guys have been talking a lot about auto numbers, and here we have stocks where we have strong valuation comfort. Maruti is something which I want to talk first. Maruti is still trading at very attractive levels. We have, done valuation on this space, and our target P multiple for Maruti is around 27, and stock is trading around 22 to 23. And should be the 10-year average for Maruti P is around 32, 33. So it is still very attractive from valuation perspective. We have a target price which is around 11,500 or so. And going ahead, we'll revise it upward. The other stock which we are liking is Eicher Motors. Here too, I understand the market is not very upbeat and is not very happy the way auto sales numbers have come for this month. But I think 1 month data will not determine the trend. I think last 1 year trend has been very positive. We are seeing a lot of people flocking towards the showrooms and buying new stuff. So we are optimistic. Even on Eicher front, though, stock on price front looks that, okay, it has not shown much of correction, but the earnings have catch up so substantially in last 1.5 to 2 years that it is still looking attractive. So here too, the 10-year average for Eicher is around 34. It's currently trading at 25 P, and our valuation multiple is around 30. So we are not even going to leverage. So valuations are pretty attractive at this point of time. So auto is also one of the space which we are liking, and these are the 2 names. And I can dwell further on the other spaces as well. So
what we'll do is we'll take a quick break. We'll also try and get you on video We only have your audio line right now. So let's take that break, try and get Siddarth on video, and then we'll find out the other stocks and sectors that he's fond of at this moment with markets at 19,000. Welcome back. As promised, let's get back to that conversation with Siddarth Bhamre. Now, before the break, Siddarth was telling us that he's still willing to be in the party, but he's going to dance closer to the exit door. And I think that's very beautifully put. Quite easy to understand the sentiment there, Siddarth. So tell us, you gave us one or two auto names that you like. You like Maruti, you like Eicher. What else are you looking at? Let me ask you, for instance, look at all these defense stocks. They've gone through the roof. Even today, something like a Mazgaon. So does this make you a little uncomfortable looking at this rally, or are you still willing to kind of wade in?
So, though we don't track that space, Subhi, but I would like to address that issue which you're talking about. When market goes up substantially this way, and when most of the people are anticipating correction, you will be surprised with the quantum and the pace at which market would move higher. But whether markets are moving higher or they're consolidating, I think the prudent approach fundamentally would be to see valuations. And since we are not tracking that space closely, so I won't comment on that. But mid-cap and small-cap seeing a lot of action. Yes, some of them are justifying the up moves, but many of these stocks are not supported by earnings or, the growth rate. So I won't venture out too aggressively over here. At the same time, I don't want to sound as if, I'm very negative on market and I'm not suggesting to take exposure. But I would suggest whether markets are consolidating or moving higher because of liquidity, or India is the only option which is left to invest, I think it would be always prudent to have a valuation approach.
It has unfortunately not got you in a great line, so we'll have to leave the conversation here, but look forward to chatting and getting your views in on the other sectors like technology, the asset management companies which skyrocketed.